Hey everybody, it's Rob Palacha here, and this is my weekend report. And of course, this is just a journal from me to you in regards to things that I've been tracking and that I feel like you should know about in the mortgage industry and the housing market. It's not the weekend, and I know it's been quite a few weeks, but I was actually waiting for some substantial announcements and things and see how they fell together before I kind of got back to you because that's kind of what I was waiting for to drop some of my own conclusions and see how things unfolded. So the three things really that I'll touch base upon is, of course, the OSFI announcement in regarding to the stress test. Um, the federal budget came through, and we can touch base on that, and of course, the Bank of Canada announcement today. So those were the three things I wanted to see what would kind of happen altogether in regards to housing, interest rates, and all that stuff together. So why don't we just start with the Bank of Canada announcement? It happened today. Really, there's no surprises there. We were expecting them to keep the rate at 0.25%, and they held the rate there. They mentioned inflation being around 2.2%. They were very happy about that. Overall, they have an optimistic look on the economy. They are still waiting to see employment slack to be kind of taken up, and not expecting to raise rates still till well, they're suggesting now the end of 2022 instead of 2023, but we'll see how that goes. Still pretty long view ahead until we start seeing rates go up based on what they're seeing. So that was all good. We expected that. A play that we were kind of waiting to see what happens was the federal budget. See if there was any sort of regulation getting pushed through with the budget in regards to, um, uh, you know, qualifying on the mortgages or different regulations around housing. There was nothing really in any substance in regard to making housing more affordable for the everyday Canadian. There was definitely some policies and promises in regards to affordable housing overall, tackling poverty, which are all noble causes, of course, that we should address. But nothing directly in regard to the housing market and the fact that it's been on fire for this last few months and really for the last year. Now, why don't we touch base on OSFI? That's the office of the Superintendent of Financial Services. So basically, the police of the banks. And, they made a big announcement actually a few weeks ago in regards to uh, their stress test. So the stress test, as we know, is an interest rate that's basically pegged at the 5-year Bank of Canada 5-year rate, which currently is at 4.79, or it's that or 2% greater than the contract rate. So whatever's more is basically what you would qualify on the mortgage for, even though your rate might be 1.6%. You would still have to qualify at 4.79. So what they basically have come out, in response to the fact that the market has just been on fire. We've seen home prices now grow 10, 20% in some markets year over year. Even month over month, we've seen increases of 5, 6% in certain areas. So, I guess they felt they needed to stay face and do something. And what they've announced basically is an increase in the stress test for uninsured mortgages. So uninsured mortgages are basically mortgages on homes that have values over $1 million, where you require a 30-year amortization, an investment property of just one single unit, like a condo or something, and of course refinances, which is a big deal. Refinances in general all considered uninsured mortgages now. So, and what they've done is basically increase the actual rate that you're stress testing. Instead of being 4.79, they made that threshold at 5.25. So they've increased it, a good 35 basis points. And, we're seeing that basically who's going to be affected by this the most? Well, I think the most in regards to who will be affected are people that are probably refinancing and are worried about how much they can stretch their dollar to consolidate debt on their income. They're basically calling for about 4 to 5% decrease in your qualifying amount. So in general, this can have an effect on certain people. I think the refinancers will be the people most affected by this. The purchasers and all that stuff, they'll just adjust. Expectations always change, and they'll just adjust based on that 4 to 5% difference. And they call for overall effect about 24% of the people that are actually qualifying for mortgages. It'll affect about that many people. So it'll be interesting to see how people, especially refinancing, will do. It's interesting that they chose this because one of the reasons why they suggested they were doing this, I mean, besides the fact that it was obvious that they were just trying to do something to show that they were doing something, like I don't really think it'll have a gross amount of difference on home prices at all. But one of the things they've quoted, and I'll quote them saying that they want rates to reflect the expectations of pre-pandemic rates. So, rates are going to go back up. Pre-pandemic rates, you have to expect that rates can't stay this low forever. And I think that's a real laughing point because let's be honest here, rates right now are exactly where they were before the pandemic started. So, if you think about last December, January, before the pandemic really started making waves and eventually hit our shores here in March, like rates are exactly where they were now, right? So insured mortgages are floating around 2%, 5-year fixed, 2%. And then the uninsured mortgages are floating anywhere upwards to 2.5%. And that's exactly where they were back then. Even variable rates actually are even better now than they were then. But in general, like they're not too far off from where they were at that time. So I'm not sure what the heck they're talking about, quite frankly. And it kind of got me thinking, like, the whole idea of the stress test in general was all about, making sure we can qualify for rates that are definitely coming back, And it made me think, when's the last time we had discounted 5-year fixed rates? So not the Bank of Canada rates, the actual 5-year rates on the market that were, at 5% or at 5.25% or floating around there. And to be honest with you, the last time we had rates that high was late 2008, early 2009. It was a long time ago. And I can't help to think, what is the point of this anymore? What are we actually aiming for? I don't really think rates are going there. It's kind of obvious that there's a new lower standard. That was a time where rates kind of floated around there. It was a happy spot. It was considered a neutral spot for, as far as balance between the markets, between the mortgage interest rate and home prices and the whole capitalization of the market, right? But the reality is it's, that bar is gone. It's clearly dropped. I think, in 2019 when we saw rates kind of peak up into the mid threes to the high threes and that threshold, what we saw was things starting to slow down, right? That's what we saw. And what did rates do? They came down. They came down to where they are about now. And then the pandemic started. And then they totally went downwards from there. I mean, of course, that was a whole different story. But so I think it's kind of clear that there's certain levels that, bandwidths that we're never going to see again. And that above 4% range, I just don't see happening, So, it got me kind of really thinking and about, the net effect of this, and it was really interesting to understand some of this. For the longest time in Canada, we've seen more and more people becoming homeowners, right? If you actually look at some charts from early 90s, we've just seen a steady increase and then of home ownership happen in this country, which is a great sign of how our economic growth and how well Canadians are doing in general, right? Owning a home is such a financial milestone that we've all, luckily, many of us have been able to achieve. So what we've seen is that kind of go up. And then in 2016, when they've done a consensus, we saw for the first time it went down. It was interesting because that's exactly around the time we started seeing the B20 rules kick in regards to, the stress test. And what have we seen since then? We've just seen prices of homes grow exponentially, right? I mean, so when you start kind of putting this together, it made me realize, like, the stress test is really not doing anything for anybody. It's not bringing home prices down. And actually, I think for the most part, it's creating more reason for prices to go up. Now, hear me out. So, if you think about it, the biggest problem we have, and everyone talks about, is the supply. There's not enough listings. There's not enough homes to buy for all the people that want to buy. And the truth is, the movement of capital is so important in that part. So when you have a stress test, what you're doing is you're blocking people that want to sell their home to go out and get the money they need to go buy that other home. And that could be for whatever reason. If you're upsizing, downsizing, if you're moving to the other side of the country, if you're, buying a multi-generational home now, whatever the case is, there's always a reason why people need to move and want to move. But the fact that they're not is why we don't have a lot of supply. And I believe, honestly, that the stress test is the biggest reason. Because the average person making the average sort of income can't afford more and more and more if they have to play on the stress test at levels, if they have to qualify at that level. Because here's the reality. If you have to sell your home and use more money as a down payment to make that next purchase happen, after a while you're like, why would I want to do that? I'd rather just keep the equity in this home. So it's keeping people from not listing. And I think that's a huge problem. And, quite frankly, we're going to be doing a 2021 consensus. I hope you all participate in it. It's such an important, piece of information that we can share amongst Canadians, really, to figure out things that we need to know, right? But it'll be interesting to see how much home ownership has gone down. And I guarantee you it has gone down. And if it does, I hope policymakers will have enough nerve to finally just say, hey, you know what, this isn't working, let's scrap it. Because let's be honest, 5.25%, it's not happening anymore, not anytime soon. We got to stop pretending it is, and we got to stop qualifying at these stupid rates that just keep people out of the market. It's keeping the wrong people out of the market. We need people to list their homes. So that fluidity, all that activity, we need to keep that supply activity up with the demand activity. And that, I think, will help balance the markets and hopefully stabilize prices. There's something else I want to mention in regards to, I think, a second big factor that is the elephant in the room, let's just say, is how we buy homes in this country. We just need to get rid of blind bidding. Like, is it just me, or is that just not the dumbest thing ever? Like, how do we actually justify this anymore? When I see home prices going for $300,000, $400,000, $500,000 above asking, like, the only reason anyone is paying that much more for that home is because they have no idea what anyone else is paying or offering. So the truth is, we need to get out of that. We need to start opening up our auctions, our the way we bid for homes. Like, at the end of the day, it's great that there's multiple offers. As a seller, it's fantastic. But it's completely problematic if we just allow this blind bidding happening where you don't know how to be competitive. So most people are driving every dollar, every piece of capital they can. Usually, sometimes it's not even their money. I mean, they're getting money from family just so they can be homeowners. And this is such a big issue. It's clearly becoming more and more of a problem, and we have to do something about it. So my thinking is, open up the bids, have them all visible, because at that point, we can be more competitive amongst each other and still be honest about the prices that people are paying for these homes. And I think if they allow the flow of capital to happen and allow people just to qualify on contract rate, get rid of this stress test, or at least make the stress test reasonable, like maybe like 50 basis points higher than your contract rate instead of this nonsense 2% or the Bank of Canada rate or whatever these guys have just announced. Like, get rid of that. Let the flow of capital bring in supply, create more activity there, and just allow people to be competitive amongst each other in an open and honest way. I think that's the best way to go to actually curb home prices from getting absolutely berserk. And people will argue with me that they are already berserk. But guess what? You haven't seen nothing yet. Like, nothing's changing. So, if nothing changes now, what do you think is going to happen? It's just going to keep on going, right? So, I think if there's a chance of this being controlled, and the most honest way of doing that is getting rid of this archaic policy, allowing capital to flow, and just being honest about the bidding process. Have an open, honest conversation about home prices when you're negotiating, and not make it all about prices. Because let's be honest, like, if someone could add a little more to the price, people will do that, especially if home prices are actually listed at the value that they are, not underlisted to get 100 people showing up to see it. All these sort of like strategies, I think, really just take away from the integrity of the process, to be quite frank. So, anyways, those are my 2 cents. I hope that you've enjoyed this. I know, I don't know if you've been waiting. I'll just say you've been waiting for my purview of on what's been happening in the last month. I appreciate your patience. Of course, this is a journal from me to you, and not everyone writes in their journal every day. So I apologize that you had to wait, but I thought it was worthwhile waiting to see and understand how things pan out with all these things. And please give me some feedback if you really think I'm off mark about inflation, about Bank of Canada, about the OSFI announcements, or if you think I'm totally wrong about bidding. Like, please tell me. I'd love to hear from you. Message me, email me, and hope to talk to you soon. Thanks.